But Anuj is back in town and back here in our studio to give us a quick trade setup. Anuj, morning. Hope you prayed for all of us, including praying for yourself. But great to see you and that coverage there. For the markets, I think prayers are much needed now.
Morning, Sonia. Thanks a lot. Yes, indeed. Prayed for the entire family. And of course, it was a divine time over there. Well, coming back to the market, you'll remember about a week back or so, we had put some caution on table that there were telltale signs that this market now needs to correct and correct big perhaps. What is this correction? Basically, some kind of flushing out within a larger trend. The larger trend is still up, but the corrections in larger trend can be brutal, like we found out over the last 1 week. Now, there are two issues which need to be addressed. First is HDFC Bank, because that's really been the primary reason for this correction which started. HDFC Bank hit 52-week low yesterday, and it's seen delivery volume of 25,000 crore since results, 52% FII holding. So suffice to say that a lot of this has been from the FIIs, and that's one reason that the Bank Nifty has been doing what it's been doing. HDFC Bank alone has accounted for 2,500 points of Bank Nifty's fall. That's what happens when an index is lopsided. I mean, it's like a double-edged sword, right? It works when it's in your hand, and it can cut you back as well. Now coming to the mid caps, they had a one-way rally, and the only thing driving rally in a lot of stocks was just liquidity. I had given an example of Previk, for example, the kind of rally that it had seen, and the stock had become 100 times. Many mid caps had reached 100, 200 times PE, and there were enough signs that some of these would correct. Now coming to the setup for the day and for the Nifty and the Bank Nifty, I think the next level to watch is the 50-day moving average, both simple and exponential. They are placed very close to each other, 2971 and 21,083. The texture has been very clear. Sell-on rally has been working in this market. On the Bank Nifty, I think the next level to watch, and it's very important level, is the 200-day simple moving average, and that's placed at 44,666. If 44,666 is broken, then another 1,000-point downside opens up. But in between, of course, you'll have short covering bounces, short covering rallies as well. But the texture clearly on the market has become quite weak of late.
All right, 44,666, 44,600. So it's, I mean, lots of supports in that zone. 44,600 is also the 61.8% retracement of that full rally from the October lows to the December highs, all-time highs for the Bank Nifty. Anuj, thank you very much for that with that trade setup.